There's this new way to get AI in just about any app that you use. You can combine AI with over 5,000 apps to automate work with apps that you're already using. You can combine AI with over
All right, mic check, mic check. I think we're situated. Thank you guys for joining me tonight. Gotta tune in here. I got my, what do they call for the solar clips? Gotta make sure I wear them for the stream. Protect myself from the bright sun. No, I'm just kidding. But yeah, I did have that pass by me today, so that was interesting. But I didn't look too hard at it. And, it was an experience. Like, you just go out there because everyone else is. And you just, all right, cool. The sun is being covered a little bit by the moon. But what do they say? Another one's not happening for like 20 years. But I feel like they say that like every couple of years. So that is kind of funny. But thanks, guys, for tuning in tonight. I'm going to be going over the latest on GameStop. I mean, that's what I talk about, right? So here we are looking at the 10K. I threw together some charts we're going to go through, or I finally updated my charts that I had started. And no, not actually going to wear these the whole time. Can't even see through them. Like if I hold them up to the camera, like you can't even see through them. So, I mean, they're designed to like block out everything but the sun, right? Or block out the sun so you don't go blind. So they are pretty much completely black. But anyways, here we are. Got SG&A pulled up here. We also get the margins laid out. Shout out. Wish I got the name remembered, but I don't. Someone said during my live stream for the earnings report, like, hey, just constructive criticism, like you should make the colors brighter. And I think it looks much better like this. Definitely let me know what you guys think. I think it just looks much, much cleaner. And I was finally able to add, Q4 and the year total for all these respective stats, obviously since the report came out. And, there's good aspects and there's bad. The revenue portion and some small things I think are reasonable where people are like, what is going on? But at the same time, I think the fact that they're net profitable and in a spot now where they're able to operate profiting consistently, or that would appear to be the case. Obviously, we'll see what the next earnings reports bring. But with that being the case, I think they are all right. Like I'm not saying that in the short term, like the stock's just gonna explode. There's gonna be some sudden move, right? It just doesn't seem like that's gonna be the case. But if you're a long-term investor, I don't think you could be unhappy with this report because overall, they're getting to where they want to be in terms of just operating efficiently. And now Neer Patel's gone. Ryan Cohen had a tweet about that as well. I forgot what it was exactly, but it was funny that it's basically a not for long type of tweet. The end is near or something like that. I forgot the exact tweet, but what a guy, Ryan Cohen. And yeah, no, I mean, again, I understand why people will say, oh, it's not bullish. They are their COO. But at the same time, if it's a situation where it's just not working out, that is a highly paid individual. Like it is what it is. And I understand where people from the outside maybe looking in that aren't following GameStop very closely are just looking at everything and are like, how do these people that like the stock just keep saying everything is bullish, everything is great? And I think, it's all perception and from where you're standing, like what you see, just like the solar eclipse today, right? Where depending where you were in the United States would depend how much of the solar eclipse you saw. And I'm not sure like other countries saw it or what the deal is. But point is, it's all perspective where for me as a long-term investor, I know what I have with GameStop and I do believe in them in the long term, but I'm also very accepting of the fact that this is going to take time. That's just the reality of it. It's an investment that's going to take time. And some people are not okay with that, and it is what it is, right? It is what it is. I know what I'm in. I'm going to keep reading the numbers. And while the revenue was disappointing, right? If you're looking right here, I have it laid out. The revenue was much lower than the year prior, but the net income was higher than the year prior. And if you look at the full year net income, there's a significant difference. And just net income for each quarter, like quarter over quarter for the full year between 2023 versus 2022, you can really see the difference there. And the unfortunate reality is it took some of the top line revenue disappearing in order to get that bottom line positive. So whether that be products they were selling that were not quite profitable, stores that weren't doing as well that they had to wind down, and I've talked about in the past how it might not even be just a result of GameStop foot traffic going down. It could be a situation where a particular shopping center, whether it's a strip mall or a large shopping mall where many of GameStops are located in, if they just experience a lot of stores closing in that region or in that particular shopping center, that can just lower foot traffic overall. And then on top of it, if the store was just teetering on the edge of being a net profitable store, then that might have made or break it, right? Or make or breaked it. But also, you can see from looking at the report, like the amount of stores year over year. So there's a better portion. And you know what's funny, guys? I always scroll through this, right? And I don't know, this, you never like remember something or do something like, how have I not known this the whole time? Or it's like, I must have known this in the past and just forgot and I just remembered again. My random example of that is these PDFs. You could just type in the page you want to go to right here. Unbelievable. I always am scrolling around, like clicking around, like, okay, I gotta get to page 70. Boom. Right? And every time I do that, and now I'm just the other day I just typed it in here, or I don't know what made me remember. I'm like, how did I forget about this, right? So I should just start writing down pages so that it's easier to get to them when needed. Make myself like a self little guide. So these are the restricted shares, share-based compensation information, but really what I'm looking for is the stores. And when you look at the stores, you can see like year over year, they're obviously less. But also with the stores, see, these are the lease liabilities broken down by year. There were a ton of leases. Like if you look in the 2022 10K, there were a ton of leases that were set to expire this year. So there were a lot of decisions that had to be made. Store count, but Control F is really your friend reading these type of reports because you want to find particular information. I'm sure you guys see me do it all the time. You just Control F, type in a keyword that obviously if you type in sales, right, or gross profit, it's going to come up a million times. Or I guess 6, not too many, but like if I typed in United States, that doesn't help me very much, right? So in this case, store count. And the more you look at these reports, the more you just get familiar with what keywords are where the information you want to see is, if that makes sense. So looking at store count, you know, year over year, they opened 35 stores in the United States, but they also shut down 69. 69. Canada, 0 openings, 13 shutdowns. Australia, 4 openings, 19 shutdowns. And Europe, 4 openings and 186 shutdowns. So 186 out of 287 stores that closed year over year were in the Europe region. But if you look at Europe sales, they still did well, especially relative to the other segments. Where if you look at year over year, 2022, 901 million. 2023, they did break that $1 billion mark for Europe. So during the last stream, I speculated a little bit that it might be a situation where a lot of items are going on clearance, a lot of like everything must go type of sales for stores that are closing like throughout 2023, and maybe that contributed to the sales. But I would also think, you know, they have to have a decently strong online presence to account for some of those sales. I would be a little bit surprised if it was entirely just a result of clearance. I guess we'll see in the next couple reports. But again, it is what it is, right? Like, you know, the haters want to, like, the couple people that always comment on my Twitter, like, one, they don't realize they're just helping me because they're just engaging. So shout out to them. They're supporting Tetron. And they get so riled up about it. I'm like, why do you even care? Like, why do you even care? It's just pretty funny. But it is what it is for me. Like, it's easy to say, I guess, because just of like how it's gone and where I'm at personally, where I just truly feel very zen, where like I'm riding this thing out until either something dramatic changes or it goes the way I want, I guess, if that makes sense. Or that would still be a dramatic change. Like if the price goes up dramatically, that's a dramatic change. Another example of a dramatic change would be Ryan Cohen suddenly not being with the company, or suddenly they lose $500 million next quarter out of the blue, right? Those are concerns that might occur. And again, I understand Like people bring up like, oh, they made $650 650 million less on the top line year over year. But if you look at the bottom line, there's such a massive swing. So also in my notes here, I had these were kind of notes I was taking as I was going through, just initially reacting. So year over year, the EPS swing went from a loss of $1.03 for full year 2022 EPS to EPS of 2 cents, which not a spectacular amount, but if you take the difference of that, that's a $1.05 EPS swing on the bottom line. So that's also a $320 million swing on the bottom line in terms of just total net income, not breaking it down per share. And then in revenue, you're looking at negative 650 million. So with that being the case, it's pretty to me it's impressive, but at the same time, like I get why the Bears are coming from where they're coming from. But I think it's just the song and dance continues, right? Like the Bears are gonna be increasingly bearish. The Bulls are gonna be increasingly bullish as more of these type of things happen. And just a general example or perspective, I guess, is there are a lot of times I can remember in the past just reading about what a company's doing. Like a company announces layoffs, particularly like tech companies. And when they announce layoffs, it's bullish. Stock is up like 5% the next day. Oh, they're cutting jobs to save on costs. That's like the narrative around it. And then there's generally like a positive reaction. And it's not always the case, but it's just funny when there's a lot of situations like that. And then with GameStop, oh, they're cutting jobs. It's absolutely horrible. Everything's going bad. But again, it's just cutting costs. And I'm not saying it's all just like sunshine and rainbows. Like, oh, yeah, like they're just going to keep laying everyone off and cutting all the costs. And then they'll make a net profit, but their revenue's going to go down forever. That's not what I'm saying. I'm saying they do still have a lot more work to do, and maybe for some individuals it's not going as best as anticipated, but it's all again perspective of where your head's at and what your expectations are. For me, the company's still moving in the right direction, so I'm okay with it. And again, I'm patient. Like I'm not in a rush for this, so it is what it is. That's how I look at it. And you can see like my estimates here were wrong. So this was assuming full year was 14 cents, or yeah, for the analysts. And although it came in at 2, my estimate was 80 cents. Obviously, I was way off. I was way more bullish on the bottom line. And really, for me, my estimates also were completely wrong in terms of the top line revenue. I really didn't see that coming. It would be nice to have a little bit more insight on that. Maybe there's more information we'll kind of see over time that gives us more perspective as to why the revenue was the way it was. But for me, I think just looking at it at surface level and also now having a week to digest it, that's something else I talked about in the last report when I was just reporting on it live. When you take time, digest it, just get the full perspective, see some different opinions out there, and just look at the big picture. Their revenue could be flat again this year, but I think net income will be a little bit higher. And I think as long as they maintain, and it's not, I think, I know if they maintain positive net income, yes, it might not be flashy what they're doing, but they're going to keep stacking up the balance sheet, the cash on there, and then eventually use it to deliver shareholder value. But what they use it on, they have to be very particular on, in particular in making that decision. And also, it's about execution. It's not just like, oh yeah, like they're gonna put some money here and it's gonna work out great. It's gonna be how do they execute upon that, and they're just doing a lot of the small things right. And again, it's not this flashy investment, right? That's kind of I think one of the Bears' biggest arguments I would say is, oh well, what's GameStop doing? Consoles are going diskless, which is not true. A lot of them still do have disc, and I feel like a lot of people still do want to have like a physical game. I know I personally do, just from growing up in the era where it always was a physical disc. Like I get that everything's becoming software, but they're doing other stuff as well in terms of like collectibles and just things pertaining to gaming and technology as a whole. But they have to do more, right? And they have to seek out a way to expand or just get more people involved with the brand. There's options, right? But it's what are they doing? What are they working on? What are they working towards? We've seen the digital asset slash NFT, although for me, I don't like using the word NFT or expression because it's so seen. Everyone's like, oh, NFTs, oh my God, it's so terrible. But like when you look at it, what it is underlying, which is just a digital asset and you truly have ownership of it, I think that is useful, but it's about, like, for me, the challenge with it right now is those being easily available to the everyday person where they're not thinking of it as an NFT, they're just thinking of it as a digital asset. So I think like the name staying forever. And I don't know if anything's to come with GameStop Player. We haven't really got an update on that. Seeing what's happened with the wallet and the NFT marketplace, it makes me think probably not. But at the same time, maybe there's something greater planned there. Maybe there's something else they're working on for months now that we don't know about. So all just speculation. But I just realized I haven't even hit the chat yet. But thank you guys so much for being here. Oh, I see a couple of my friends that love to engage. Echoes. Hi, Tetron, Sharon, thanks for being here. Meagle, thanks for being here. GME down 9% last 5 days, 25, blah, blah, blah. Hey, all. Do you still think this is a great investment? Echoes, I think I already answered your question. I don't get the worship of Cohen. Hasn't the share price gone significantly since you got involved with the company? If you don't get it now, you won't ever get it. Go back to your coloring books. It's too much for you. Austin, thanks for being here. It's chilly in here. Brett, it indeed is. He made games of profitable. What are you talking about? Echoes? Yes. See, but Echoes, you're here, you're listening, you're watching Tetron, so you're literally supporting me. I appreciate it. Like, you could share your bare thoughts. That's totally fine. But if I buy a stock, I want to increase the price or get some dividends. You get neither from GameStop. What's your time frame? 87% in 3 years. How many years do you break even? You don't have the right mindset for a turnaround play. Please sell your junior shares, invest in ETF. Exactly, Freshmaker. Exactly. And you know, an individual such as Echoes is going to take that number, oh, 87% over the past 3 years, but I bet he's calculating it from the very, very peak of January 2021. And I can tell you for myself, and I bet you there are a lot of other individuals that did not just buy at that one price. There's a elongated period of time before that and afterwards where individuals are buying. So they have dollar cost average. Yes, it's at a lower price point now, but if you believe in it for the long term, theoretically, that is the best point to buy. And also in general, just with markets, any stock investment ever, the best time usually to buy where you can get the best price. Price is what you pay, value is what you get. Where you get the best price is the point where the most people are doubting it. So as a long-term investor, you almost kind of want this doubt because you'll be able to get the best price point entry. But at the same time, I get it. When you have a long-term perspective and you've been in something for a while, you don't always want to have that mindset. But a price going down in the short term is a good thing if you are a long-term investor. And again, I'm not saying like, oh yeah, I want it to just dwindle down forever, but I'm just saying if it is lower, then you do have the opportunity to buy more and expand upon your position. And to me, that's what investing is all about, like consistently adding. Like I very rarely ever just put a lot of money into something. Like I just continue to accumulate. Like I've been accumulating Bitcoin for a long time now, and I personally believe in it. Again, I understand the bear case arguments, but for me, it all comes down to risk versus reward. I'm not putting options into play. I'm not betting on margin in any which way. So what I'm putting in, I know what I have, and it is what it is, right? But that's just my perspective. Hey, Tetron, hi chat. Platinum, thanks for being here. Hope you're doing well. Platinum, always stoked to see Tetron live. Geronimo, thanks for being here, man. Thank you. I know I gotta be live more often. I feel like I've been doing too much thinking. I gotta do more doing, less thinking. I don't know. I just think I'm like, what do I want to do with Tetron? What do I want to do with my life? I'm a young individual. There's a lot of questions to answer, right? And I'm very, very fortunate. And when I do get into these stressful situations, or not stressful situations, but like everyone, I stress. I'm human. I think, okay, what am I going to do next? Like, what am I doing with my life? What am I doing with my YouTube channel? All these different things like kids, future, all sorts of things, right? That are just on my mind. And I think I just think too hard about it sometimes, and just gotta go. Just do. That's probably the best thing to do. So I'm just trying to do that more. But again, the point I was trying to make with that is, despite having like stress and worry, I guess you could say, although relative to other people, the whole mass of the entire world, right? Like I'm incredibly lucky, and I try to remind myself that when I'm feeling like stressed or anxious in any way, like, oh, what am I gonna do with my career? What am I gonna do with my YouTube channel 10 years from now? Like, I mean, I don't think normal people think about that kind of stuff. But I'm always thinking like every possible scenario. What if this? What if that? And my point is, when I do get into that framework of mind, I try and remind myself, like, okay, like I'm incredibly lucky to be where I'm at. at my age, to have what I have, to have so many great, like, loving people around me, to have awesome people like you guys in the chat, just like tuning in to Tetron Live, just hanging out, talking GameStop and whatever else. So I try and just remember that. I'm like, okay, I'm incredibly lucky. I'm incredibly blessed. So are all those worries about the future even worth worrying about? Might as well just live in the moment a little more, right? So I guess that'll be my inspirational portion of the stream for today. But another, example of where you see net income getting stronger here, and definitely let me know if you guys think these graphics are better. I'm gonna get them on Twitter soon. I liked that it was green and red because it matched like my logo, but then I was like, all right, it needs to be a better graphic. So yellow and blue just pops so much more to me, and also like the red and green because it's also the reason I'm about to say next is also why I chose red and green as like the theme colors Tetron, because stocks go up, stocks go down, right? Green, red. And also I like Christmas. Those are Christmas colors, complementary colors. But regardless, here we do have the margins quarterly. We have gross margin versus net margin for 2019 through 2023. Another option I could add on here is operating margin. And right now, the operating margin would technically still be negative just because the interest income they're receiving is just putting them over the edge of profitability for the year 2023. Although in 2024, I think it could be a situation where their operating margin will be net positive, and then the interest income just puts them that much more positive in terms of the net margin. And again, really the story is the bottom line. So from Q1 year over year, it goes from negative 11.5% to negative 4.1, negative 9.6 to just negative 0.2, negative 8 to negative 0.3, 2.2% up to 3.5%. So looking at the gross margins, though, we do see a little bit improvement year over year as well. So up about a percentage and a half here, another percentage and a half here. Here too, no, here, yeah, here's also another percentage and a half. So besides Q4, every quarter saw the gross margin rise by about 1.5% ish, which not astonishing, but definitely moving in the right direction because if your gross margin gets higher, it does get easier to raise your net margin. I mean, not always the case, but I think in GameStop scenario where they are cutting a lot of costs, a lot of overhead costs that are kind of the difference between the gross margin and the net margin. If the gross margin's higher, like that just makes that much more of a difference on the bottom line. So, hello Tetron DB, thanks for being here. Hope you're doing well. Tetron, hey Platinum, Boondock, thanks for being here. It's always good to see everyone popping in. We could use some encouragement from Ryan Cohen. Love the chart. Jackson's, thank you very much. Appreciate it. Yeah, no, exactly. I mean, yeah, I think it would be nice to hear Ryan Cohen say something, but I guess you mean more so now that I'm saying it out loud. Probably buying some more shares. That would be absolutely encouraging. I feel like it's coming. I really do. He's done it once each of the past 2 years. So he did once in 2023. It was about June. And then in 2022, if I'm not mistaken, I think it was around this time, like April. So we'll see. Maybe after the Q1 report, maybe that's the situation because that would kind of match up to last year because the report we just had was full year slash Q4. So with that being reported towards the end of March, that means the next earnings report is going to come towards the end of July, right? Or no, if it was the end of March, it'd be April, May, June. So the end of June, around my birthday. Exciting times. But if that's the case, then we get Q1. And then when Q1's reported, maybe it's a situation where he buys some shares. But, a lot can happen between now and then with the stock price. So we'll see. But that would, I think, be the most encouraging thing, in my opinion, right now for GameStop investors is to see Ryan Cohen continue to acquire shares. I mean, he's never sold any. So I think that alone is encouraging. But seeing the individual that's captain of the ship, chairman of the board, and people made the new meme like, instead of like Ryan Cohen buys all the stocks, Ryan Cohen works all the jobs or something like that because he's just been getting rid of like, Furlong and now Patel. But that's also less shares that are going to vest because if you do look in here where, oh, it was all the way at the bottom, right? Vesting. So there are going to be less shares that are going to vest. See if you, another example of using Control F wrong. if you type investing, it also picks up investing. But yeah, see restricted stock award, granted, vested, and then forfeited. So large amount forfeited. Probably part of that is furlong, and then now there's going to be even more that are forfeited from your Patel's departure. So let's see. During 2023, 2021, we included compensation expense inclusive of forfeits relating to the grant of RSAs and RSUs in the amounts of 22 million, 40.1, and 30.5 million, respectively, in SG&A. So the forfeitures relating to the grants of the RSAs and RSUs. So it is being accounted for in SG&A. It's just another aspect of the overhead cost. And let's see, in 2021, we granted 742,972 shares of time-based RSAs with weight average grant date fair value of 29.42. There were no grants of time-based RSAs in 2023, 2022. In 2023, 2022, 2021, we granted 2.4 million, 5.5, and 4.0 million shares, respectively. Fair value grant dates of 17.27, 31.43, and 44.87. So pretty much each year it's been vesting, and there was no income tax expense inclusive of excess tax deficiencies and valuation allowances associated with stock-based compensation for fiscal 2023, 2021. Total RSU vested, respective vesting dates, respectively. Okay, so I thought we were going to get a little bit more breakdown, but I suppose not, just right here at least. But definitely, I can tell you there will be less shares vested and some forfeited as a result of his departure. So we'll see what that exactly looks like in upcoming reports. But overall, those that are still involved in running the company, besides Ryan Cohen, are being compensated in shares. So their wealth or their pay, so to speak, does hinge on the company's success, which I think is a great way to have it. And maybe, for some executives who are just so used to getting guaranteed pay or their pay just being non-fluctuating based on just it being straight cash and not shares. Maybe, a couple of the executives that we've kind of seen leave weren't really too thrilled with the way things have gone in terms of the pay package they accepted and then the amount of work that they're having to put in, and they're not seeing the results right away. Whereas those that do stick around, and when I do believe things to work out for the better in terms of the stock price, that's where they'll reap the benefits or see the benefits, I guess you could say. Let's see. What's your opinion on forward guidance? I can't remember if I asked you this before, but I personally would appreciate some forward guidance, especially with the marketplace closing and revenue down year over year. Just an early idea, not even specifics. Platinum? Yes. No, I think that's a very fair point, and I don't think you've asked me this before, unless I forgot. But yeah, as time goes on, I do kind of want to get more forward guidance, because I've talked to a couple people that I know in my life that are a little bit interested in GameStop, and that does seem to be the most common theme. They're like, well, I don't know what's going on with this company. Like, they're so quiet. And I'm starting to get that perspective more and more, or starting to be more open with the idea of them putting guidance. And I agree, maybe not some specific numbers that can be pinpointed, like, oh, look, they missed their guidance, but just some insights or perspectives of what's going on, initiatives in place. So I would say, yes, I would like to see a little bit more of what's to come, but kind of like you said, not like hardcore numbers, like we're going to get to this number, that number, and this number, so that they're heavily like judged on that. I would like to see more just like, okay, like this is what we're getting to, or this is the range we're getting to. Here's how we plan to get there. Here's what we're working on this year. Here are the plans for next year, right? So maybe something more simple. But yeah, I would like to see it, especially given the scenario where revenue did fall off significantly, because you also want to, I think, just in general, right? Any company wants to draw in new investors, and a lot of that, a lot of reason why a new investor might come in is like where they see the company going, not like where it's been. So that might be deterring some new investors, some older investors who may be kind of just waiting around, just kind of passively holding, like, what's going on? Oh my gosh, I'm so concerned all of a sudden. So, everyone's opinion is going to be different, but I think, given the shift that's going on right now, it does start to make a little bit more sense. And maybe with the calendar change, I mean, obviously the calendar's already changed, but the fiscal calendar or yeah, I guess GameStop's calendar is officially in 2024 now. And when we get our first report, maybe there's a situation where that's a little bit different, but we'll have to see, right? We'll have to see. Time will tell. But the closing of the distribution center and liquidation of all that equipment is what's bugging me to the most, especially with no guidance as to why. Any other investment is a super major red flag. Moondock, yeah, no, that's a valid point because also some of the things that they are winding down are things that have been opened under the Ryan Cohen era. And I can see where that's concerning. It's like, oh, yeah, well, he opened this. And it's not just him, right? Obviously, it's the team making the decision. Whether it's like the distribution center or even the customer care center that closed towards the end of last year, it's like, okay, well, you open it and you put all this effort into getting it set up only to close it down just a couple of years after. But on the other side of the coin, there's the perspective of, okay, like we tried something, it didn't work, we're moving on from it and not just going to let it keep bleeding and just hope and pray it gets better. So that's where I kind of go back and forth on that, honestly. But yeah, no, that is a fair point where it's like that distribution center is pretty major, and now they're pretty much going to be shipping everything out of Texas. Let's see, we get like the distribution information. Yeah, see, so this is what we have here. And the York, Pennsylvania one, in January 2023, we announced plans to close the Shepherdsville, Kentucky distribution center to consolidate our fulfillment activities. Completed in 2023. In January 2024, we announced plan to close the York, Pennsylvania distribution facility, which will consolidate U.S. fulfillment activities to our Grapevine, Texas facility during the first quarter of fiscal 2024. So I guess the positive side of that is they're looking to just have everything sent out of one place. It's all just in one. Like, yes, you probably have to spend more on shipping and just the logistics might be a little bit tougher, but at least it's all under one roof. And you also have the distribution and administration there. So people working in the administrative side, like the corporate office, you can also probably walk right over to the fulfillment center, get a first person perspective of some issues that might be going on or just anything in general that might need to be known. But it's also like really, really being consolidated now. So I see what you're saying, definitely. And that is another great example of why it would make sense to have some more forward guidance or it'd be a little bit more appreciated. Yep, that too. It'd be good to know more. Thanks, Tetron. Sounds like we're on the same page. Yeah, I think so, Platt. I think so. Understandable. Thank you. I was thinking it was a furlong idea. That's what got him canned ultimately. Yeah, no, that could be the case. Definitely could be the case. That is potential. But yeah, no, I always, and sorry if I missed any chats. I just wasn't have the all chat on. So glad they got rid of Nir Patel. He was the most expensive officer all by far. Let's see what we will get the vote on in June. Good point, freshman. Good point. I did forget about the yearly shareholder vote, but yeah, and Patel was the most expensive one. That most expensive one working there with the corporate team. So that is another good point as well. Do we have an idea when the Ryan Cohen Bed Bath lawsuit will be settled? Seems like it has been a while. Yeah, Jackson, honestly, I completely forgot about that. That's another great idea to bring up, or just, I'm glad you mentioned it because I kind of forgot about it. And his hands might be tied. Oh, what did I just do? His hands might be tied in some way in terms of that lawsuit. Like he can't say certain things. I don't know the specifics. Uh, it's crazy. I personally believe that if Ryan Cohen could go back in time and change one thing, I think he would have never bought Bed Bath shares because of all that's happened ever since he did, right? Whether it be the lawsuits, the individual saying there's super secret triple mega quadra merger or whatever they would say. Like it's like that meme of the guy from I think it's Parks and Rec. I'm not sure where he's like, oh no, not Parks and Rec. Oh my gosh. With DeVito. I don't know the name of the show, but basically it's the guy where he's like, trust me, it's all this is what it is, and like that's what the people that were saying like there's like this super secret merger between Bed Bath and Teddy and GameStop. and Dragonfly and this, and there's this one filing that has this one word that if you connect it over here and put it next to this, it all makes perfect sense, and it's Ryan Cohen's secret plan. And that just stained the perspective of GameStop to outside individuals, because you have clowns like Dan Olson make whole documentary videos like and throwing me in there completely out of context, and in the mix of with those people saying there's this super secret triple double quadra mega merger, and it just made everyone involved in GameStop or holding GameStop look ridiculous when there was tons of people who didn't believe that. So I think that's really just stained his name and GameStop as a whole, just from outside perspective. Again, everyone could think what they want and everyone's going to have their own personal opinions, and that's fine. But I think it's really unfortunate everything that happened with Bed Bath. So it is what it is, though, at this point. And yeah, no, I don't have any insight, though, of when it'll be settled. There's 2 lawsuits, and not sure. Yeah, not surprised, though, unfortunately. I wish I could say I was surprised. Like, why would they sue him over that? It's crazy. And yeah, no, politicians can, be involved in certain industries and then trade the same stocks in those same industries, and everybody looks the other way, right? Or nothing ever happens. Someone buys a company, writes a letter and how they should improve. They're at a disagreement, so he decides to sell. Oh, he used this advantage as the meme king. That's the whole CNBC documentary of like making of a meme king. That was their whole spin on the story, that he abused his power to take advantage of Bed Bath and Beyond shareholders. So, again, that's just another example of it all being perspective. It really is all perspective, and you're here listening to Tetron's perspective, and I appreciate you guys tuning in. And yeah, I'm always going to try and keep it real with you guys. There's nothing in it for me to, like, it makes me laugh when people are like, I know what you're up to. You're selling covered calls and you're screwing over your viewers. I'm like, I'm not doing that. Like, I don't have any incentive. Like, obviously, I like the stock and I own shares in the company, but I'm just going to keep it real with you guys. I'm not trying to say, like, oh, everybody get in this. It's the next big play. Like, I'm not like that. It's just not me. And, people are always going to just assume things, and it is what it is. I know what I signed up for in doing YouTube. But yeah, no, I really just always am going to try and keep it real for you guys. So to me, that's important. Just being honest, and not a lot of honesty in today's world. So I get people's natural, I guess, thinking, oh, Tetron's so deceptive, or oh, he's doing this, he's selling covered calls. Him and Morant's Rants are selling covered calls and just grifting off their viewers, and it's all nonsense. But like I said, it is what it is. So moving on here, though, getting the SG&A, keeping the theme of SG&A in dollars and percentage of revenue. And the yellow is the SG&A in dollars per quarter over the last 5 years. And then the blue is the percentage relative to the revenue. So I think percentage is definitely very important on this one, considering revenue is going down. So SG&A is going down, but you want to also, like, that information is relative to the amount of revenue. So that's why I put the actual dollar amount as well as the percentage. So if you look year over year from 2022 to 2023, so for me, Ryan Cohen got involved, pretty much at the end of 2020. Really, 2021 is where he started making decisions and just actually, I would say, having some form of influence in the company and just wiping out the board, bringing on a whole new team in terms of the board of directors and just making it way smaller than before. This is really where he got control. So I think it's really worth judging from like here on out, probably about Q2 of 2021. And obviously, this is post the whole January 2021 drama, or not drama, I should say nonsense of the buy button being turned off. And that's, that could be a whole forever lasting conversation in itself. But point being, I would say, judge them from here on out. And I see it as the 2021, these last 2 quarters were just really starting to cut off the massive amounts of fat, or I'm trying to think of a better way to phrase it, but just the obvious excess. Whereas 2022 was like, okay, let's shift, pivot, and just cut off a little bit more excess. And then really into 2023, it's like, okay, like we've figured out how we're going to go forward. Let's execute and make sure we turn a profit. And it wasn't as big of a profit as I hoped. But at the end of the day, it was a net profit on the year, only 6.7 million. But the fact that they did that with less revenue, I do think is encouraging in terms of how they're operating within. So, again, all perspective. You're more than welcome to disagree with that if you'd like. But with the SG&A, year over year, down 100 million for Q1. For Q2, it's down about 60 something million here, about 65 ish. And then for you looking at Q3, almost another 100 million, more like 90, but round up, you got almost 100 million. And then looking at Q4, almost $100 million swing, which is really impressive because it is their busiest quarter, so there's a lot spending. And it's kind of crazy to think that the Q4 SG&A amount was literally less than any quarter in 2022, even though Q4 is the most and they do have to spend the most on overhead costs, whether it be like overtime for employees or just temporary employees in some cases, right? But yeah, if you look at percentage, they're improving year over year about 5% each time, roughly. So here, about a rough 5 or 6%. Here, a little bit more than that. Here, about another 5%. Here, we didn't see quite a big change, but that really is a result of the revenue change being so significant. So, yeah, that's the general breakdown of the numbers in terms of margins right now, SG&A, and then revenue and net income. If you guys want to see any other charts, like let me know. I'm gonna keep trying to just build these out, and I'm trying to think what I'm gonna do for Q1 when it comes around. Am I just gonna slide everything over on all of these, or maybe it's time to drop out 2019? For this one, I'll probably slide it over. I think that should be very possible because it only started in 2021. But for these two, probably have to drop out 2019. But I don't think 2019 is that relevant at this point. And yeah, I'm definitely gonna tweet out some stuff about these in the future. Like I want to do little write-ups on them, but just haven't really got around to it right now. So I was thinking maybe I'll just throw them out there. But at the same time, like I kind of like to do what I did previously on my Twitter. Oh yeah, and I forgot I wanted to go through this here. Um, where's my pinned tweet here? And this pinned tweet, I keep it pinned because it still rings true to today. The strength of GameStop's balance sheet provides them with the opportunity to focus on the long term. With 392 in cash per per oh my gosh, with 392 per cash in per cash. Oh my gosh, with 392 per share in cash equivalents, and marketable securities, this represents over 20% of the share price whenever GME is below 1960. Getting near $10 now, almost 40% of the share price is going to be represented in cash equivalents, and marketable securities, which is just crazy to me considering they are not near, they are profitable for the year and they do have the opportunity to continue to be profitable. See, of course, gotta push out the negative articles, right? But with a strong balance sheet, success hinges on execution and improvement for GameStop. They're continuing to evolve, improve, and push forwards on the management team put in place by Ryan Cohen. While there are still challenges ahead, I think they are in a great spot at this moment in time. The next major goal appears to be full year profitability, which they were able to pull off. Achieving profitability opens the door to delivering shareholder value through initiatives such as share repurchases, dividends, acquisitions, improving core business, expansion of new segments of business. Brick by brick, continue to improve, but the balance sheet shows there's no need to take on high interest debt. Meanwhile, they continue to accumulate interest, expanding their cash reserves until the right opportunity arises to create for a shareholder value-driven initiative. And that's still true to this day, right? Where stock price is going to do whatever it's going to do, but so long as their balance sheet is strong and they are turning a profit, yes, it might not be flashy, but they're not going to go bankrupt. They're not going to have to take on high interest debt, which can push them more towards the risk of going bankrupt. So, again, while it's not the most ideal for them to just be kind of chugging along in this way, it's not going anywhere in terms of the company. That's just the truth of it. And again, unless something dramatic changes. So, really, to me, I want to most importantly see them continue to maintain the balance sheet, and by being able to do that is possible through just turning a profit consistently. Even if it's a small profit, even if it means revenue going sideways this year, if they are still profitable, they can still then seek to execute on these things. And I feel like given the way things are going, I'm starting to lean more towards these options as shareholder initiatives that they should initiate, or shareholder value initiatives. But it's all perspective, right? And they have their perspective from within as individuals running the company. Most importantly, Ryan Cohen, obviously being captain of the ship. So we'll see. We'll see how they execute. That's really what it comes down to. But Manuel, thanks for being here. Hope you're doing well. Well, didn't realize 2019 was so high. Yeah, it's crazy. It is actually nuts. But yeah, I almost forgot I wanted to go through Larry Chang's tweet here. Overrated. Projecting anticipated dilution over the hold period. Underrated. Projecting the increase in weighted post money over the holding period. The latter scales non-linearly with the former and has a more direct impact on ultimate cash on cash return. So let's read that again. Overrated. Projecting anticipated dilution over the hold period. So in GameStop's case, that doesn't really apply. I don't see them diluting anytime in the near future. I'd be very surprised if they did, unless they had some big project planned where they see it as, okay, like we're going to dilute this amount of shares, but it's going to lead to this much in profit. But also, again, when you have a strong balance sheet, you don't really have to do that unless you're making a very enormous move. But I don't think they're going to do that, like as just said. But underrated, projecting the increase in weighted post money over the hold period. So holding the cash, you estimate the value in the future. It's just one small case, and this is honestly the first time I'm reading the tweet. Like I pulled up, I'm like, oh, I'll analyze it in real time. But Larry Chang, sometimes this guy's got his a way with his words. He's got a. Let's see, my eyes hurt. How could I think that buying $3 glasses on Amazon is staring at the sun could end well? I didn't see that one. Yeah, one thing I could see through the glasses. I knew these memes were gonna be there. That's why I clicked it. But yeah, no, I was looking at a lot today too, and these. How much are these? I don't know. Medical King. It sounds like the name of. I don't know. And then even on here it says thoroughly inspect the product, and he says damages use limited to a maximum of 3 minutes continuously. Of course, I read that like after I was like, huh, for like a long ass time. But nah, I think I'm good. I feel all right, so I'm not too worried. But yeah, it is crazy. It is crazy. Clips, and by me, there was an earthquake on Friday. I'm sure you guys saw that in like the New York, New Jersey area. I was just in my house. And I'm like, why are things shaking? What is going on? I was looking outside. I'm like, the wind's not blowing. What the heck? But yeah, no, that's pretty much all I got today. I have to keep it short and sweet, but I'm gonna run it back tomorrow, get a little bit more into the details of the 10K, really kind of go through some of the information, see if we can find anything. Business priorities are always something important to look at, and then we have the new investment policy, but try and break it down a little bit more for you guys tomorrow. Just gotta get more streams in and just keep getting better at what I do, and keep just trying to get into all the details of GameStop, talk about some other things. I think increasingly more and more outside of GameStop and just a world view, owning assets is becoming increasingly important with the way inflation's just escalating and the amount of dollars existing is just escalating very much. So money's just going to be inflated more and more. And there's no sign of government spending slowing down. And our taxes aren't catching up to the amount we bring in taxes is always less than the amount that's being paid out or being spent. So we're always running a deficit, and there's no sign of the deficit going away. There's no sign of the money printer stopping. And that, to me, that just means you need to own assets. And whether it's GameStop, real estate, Bitcoin, S&P 500, gold, whatever your thing is, I think get more involved in that. Get more involved in an asset. Of course, always do your own research, your due diligence, have your own opinion. I think that's very, very important. You can always disagree with me. I can live with it, right? Like it is what it is. But my point being, just holding cash for the next 5 or 10 years, I really, really think you're going to get burned just by inflation. And it's just the unfortunate reality. I don't want that to be the case. And with that being said, that is where I think, okay, yeah, it's great. GameStop is able to earn 5% plus, right? Maybe 5-ish% on their cash equivalents, marketable securities at this time. That's great because they're able to earn and build the balance sheet more. But on the same token of what I just said, if their money's being inflated away, you do have to do something with that at a certain point. So it's a tough game where it's like you want to execute and use that cash because it is going to be inflated away over the next several years. But at the same time, you don't want to rush into anything and make it a waste of cash because that's just so much worse and puts you so much farther back. So it is a tough spot in that sense, but that's again, I kind of lead back to this bunch. I feel like in my streams where it comes down to believing in the management team because those are the people that are going to make those decisions and determine when is the cash actually used and what is it actually used for. And to keep going back to my main tweet here, this rings true as long as they have a strong balance sheet and they're turning a profit. And theoretically, right, they could just turn a small profit for years to come, and they could just keep stacking the balance sheet, and it just becomes a matter of when they do something, then maybe that's where things change. But right now, I think this number, if I updated it in here, did I pull it up? I didn't pull it up in here, but I did update this graphic as well. And I believe when I updated it last for Q3, I think it was 396, and I think for Q4 now we are back to 392 per share. So that's if GameStop counted for all cash equivalents, marketable securities, total right here, divided by the shares outstanding. That's where you get the cash per share. So with the stock price where it's at, we're getting to the point where nearly 40%, of the share price is actually in basically cash, because their marketable securities are made up of highly rated short-term government bonds and notes, as well as time deposits to mature in less than 1 year. So essentially, it is a cash equivalent, just technically not by definition. Cash equivalent is less than 3 months, whereas marketable security under current assets on the balance sheet is greater than 3 months, but less than 1 year. So yeah, I think we'll leave it there for today. But hello, Big T and all. Don, thanks for being here. Thanks for popping in. Yeah, a little short stream today. I'm going to be running it back tomorrow. Definitely tune in tomorrow if you guys are free. Appreciate the breakdown. Thank you. Yeah, Boondock, appreciate you being here, man. I really do. And yeah, I'm just going to keep talking GameStop and talking money, finance, things as a whole. Maybe talk a little bit more sports. I'm a big hockey and football guy. So I guess not the best time to talk a little more sports because hockey's coming to an end, or playoffs are just about to start, so that's exciting. I'm a Devils fan, so unfortunate year for us, but it is exciting when playoff hockey starts. Like, it's just fun to watch. There's a lot of hitting, a lot of fights, a lot of goals, just good plays, good energy in the building. So before we know it, it'll be football season 2. And yeah, I don't know. Baseball, it's kind of like whatever for me these days. I played growing up, but yeah, so I'll probably just start touching on more things in the streams because again, for a personal goal of mine is to try not to like think too hard, or I'm like, oh, if I don't talk about only GameStop, like everyone's like, what is this guy talking about, right? So yeah, GameStop's like the main thing, but I am trying to branch out and just talking about some other stuff. But at the same time, like I said before, I'm not gonna think too hard about it. I'm just gonna keep doing me. Wow, that sounds cringe, but that is what I'm gonna do, right? I'm just gonna do what's best for me and just keep improving. Just like GameStop has to keep improving, Tetron has to keep improving. That's just the reality of it, right? And just like GameStop, maybe it's not going as well and as fast as I want it to go in terms of improvements, but that's just the reality of it. You just got to keep pushing forwards, and GameStop's got to do the same, right? And I think we'll leave it there. But thanks for being here. Catch you tomorrow, same time, 7:30. Have a good night.